Don't you know the building is on fire?
Hello everybody and welcome back to the channel, and today's video that is going to focus on a sector that will withstand some of the volatility that we are seeing in the most recent days. There's concerns that interest rates are going up, there's concerns that inflation will start to pick up, and that is some of the main reasons for the huge drops that we are seeing in a lot of different growth stocks in the most recent days. It's pure poison. So we thought, hey, let's take a look at a sector that in general should perform pretty well under such conditions, and we have therefore decided today to focus first on the chemicals business, and we have selected 3 companies for you. The first one is Linde PLC. The current share price is $253.84 and the market cap is more than $132 billion. We have selected Air Products and Chemicals Inc., stock ticker APD. The share price is $263.23 and the market cap is more than $58 billion. And finally, we have Dupont de Nemours, which is stock ticker DD. The current share price is $69.75 and the market cap is just above $37 billion. If we take a look at the stock's performance over the last year and the returns that they have given, what we can see is that all of them has over the last 12 months delivered quite well. APD has returned the lowest with 19.3%, but still quite good overall. Linde is the next with 33.44%, which is also quite good. And finally, with 60.54%, Dupont has done the best. What is quite interesting to note around them is that they were up with almost 100% just a month ago, but has since done a huge pullback to 40%, and we're going to try to illustrate in this video why we think this is the case. So obviously we first want to understand whether these companies are profitable in the end of the day. What is very important to note in today's video is that we have changed our model a bit, which means that all the numbers are now shown in $million. So please keep that in mind. If we take a look at the net income for the last year, what we can see is that Linde has earned $2.5 billion, so extremely well. Similar thing for APD, they have earned $1.9 billion. And finally DD, the worst at -$3 billion, which is obviously not good. But what is important to keep in mind with them is that there have been an impairment on the capital assets of $3.2 billion. So again, they are profitable from an operations perspective because they have written down the value on some of their assets. They are in a loss, which you need to keep in mind when we look at the numbers in the remainder part of the video. If we take a look at the net margin, obviously that will be reflected for DD -14%, while as Linde and APD has done really well with 9% and 21% for APD. We can also take a look at the B/M score, which is a mathematical model that determines whether a company has manipulated its profits. And what we can see here is that all of them are less than 2.22 minus, so that is really good, nothing to worry about. We can also look at the Sloan ratio, which identifies if a substantial part of the earnings are non-cash accruals. We're not interested in that. We want this number to be between 10 to -10%, and all of them are living up to that. So overall, it is looking quite well for all of these, besides obviously the downside of the impairment on DD. Here we have a small new element that we thought would be interesting to add for this particular video. This is one of the things now that is going to come a little bit of a commercial for our new Patreon page that we have been working on. We're working on providing a lot of additional data. We will show that a little bit in the video. One of them is related to historical graphs around different parameters. And here we are seeing the annual revenue in millions from 2015 and onwards and see how that has developed for the different companies. And if we first take a look at Linde, what we can see is that over the last 5 years their revenue has slowly increasing, and then from 2018 to 2019 it took a big jump, and over the last year they have had a small decline in the revenue growth. However, otherwise they have seen extreme high growth over the last 5 years. Similar situation with APD. They have slowly but steadily increased their revenue, not crazy a lot. They've been quite stable, but still they've managed to increase their revenue slowly. So again, for both Linde and APD, quite solid, good numbers. While as if we take a look at DD, what we can see is from 2015 all the way down to 2020, it has dropped with more than 50%. And again, it has been more or less a steady decline year on year. So really poor numbers from DD, and that is again something you need to keep in mind. And this is something that if you just look at the numbers for the last year, this will not always show these kind of trends, and that's why it's important to take a more broad look on the historical data as well as obviously the future projections. And this is some of the things that we are intending to provide to you through our more elaborate model that will be part of Patreon. Back to the overall overview, what we can see is that the trend of the stock, Linde is in an uptrend, Air Products have been trading a bit sideways, whereas Dupont seems to be going into a downtrend mode. From a net income perspective, Linde and Air Products have been positive, Dupont has been negative, however this is due to the impairment that we just talked about before. And from a net profit margin perspective, Air Products have done considerably better than Linde, and Dupont was of course negative because of the impairment charges. Then we move into the next part, which is the return metrics. And what we can see here on the earnings yield is that Linde and APD has gained around 2 to 3%, which is acceptable, and DD is down with -6%, so again underperforming compared to the others. If we take a look at the ROIC, the return on invested capital, APD doing far better than the rest with 11%, while as Linde and DD has 3% respectively, which is quite good overall, but APD definitely is doing better than the two others. On the free cash flow yield, surprisingly enough, DD is doing the best with +6%, followed by Linde with 3% and only 1% for APD, so a bit surprising here. We then move into the balance sheet, and here we obviously want to understand how strong the financial positions are of these companies. And one way to look at that is the current ratio. We would like this to be above 1, and what we can see here is that Linde do not have that good numbers. They basically have more current liabilities than they have current assets, so it is a small negative on their side, while as APD and DD looks very good overall. On the cash ratio, again, this is in general pretty capital intensive industry, so we wouldn't expect too much cash on hand. However, what we can see again is that APD is doing far better than the two others, who has decent amount of cash at hand, but APD just have a lot more than what they have. They have around $6 billion basically. If we take a look at the total assets versus total liabilities, we in general want this to be above 1.5, and as we can see, all of the companies are living up to that, so that's fine. Debt equity ratio, in general, it's doing quite fine overall, nothing to be too concerned about. We can also look at the Altman Z score, which is just a credit strength test that assesses the likelihood of bankruptcy. We want this to be above 1.8. What we can see is no reason to be worried about Linde and APD, but actually DD is scoring quite poor here with 0.8 only, so that's something to take note of. However, I would say still the balance sheet looks quite strong overall, so we would not be too concerned as of today. But again, it's important to keep in mind that the revenue is shrinking, so that will most likely also impact the future profits unless they manage to reverse the trend. We can also take a look at the Piotrowski score. This is another way to assess the strength of the company's financial position. We want this to be equal or above 5, and here we can see Linde is doing the best, followed by DD and APD, who only scores 4, which is quite surprising to us. But as we have mentioned in some of our other videos, Piotrowski score only looks at the last 12 months. It doesn't have a historical perspective. So again, we prefer Altman Z score above Piotrowski score. Again, in the ranking overview on the ROIC, definitely Air Products doing better than both Linde and Dupont. On the free cash flow margin, Dupont was by surprisingly doing the best, followed by Linde and Air Products, which only had 1%. So again, a bit surprising there. On the balance sheet, on the total ratio, it was looking quite fine overall, and similar with the debt equity ratio. But we would say from where we see, Air Products have a stronger balance sheet than both Linde and Dupont. But again, overall, it's looking quite fine for them, with the exception on the current ratio for Linde. Next, we obviously want to take a look at the shareholder yield and understand how much value is returned to shareholders in the form of dividend and or buyback. And what we can see here is that all of the companies are paying a relative decent dividend yield between 1.5% for Linde, DD 1.7% and 2% for APD. So if you're a dividend oriented investor, these stocks are paying a relatively good dividend. On the buyback yield part as well, Linde has been repurchasing stocks over the last 12 months, so that's 1.8, and the same with DD on 0.5. So if we look at the total shareholder yield, 3.3% for Linde, 2% for APD, and 2.3% for DD. However, it is also important to take a look at the total payout ratio because that shows how sustainable these payouts are, repurchases of stock. We want this to be below 100 because it means that there's room for growing the dividend and or the buyback. So when we look at Linde on 169%, we can see that it will not be sustainable for them in the long run to pay 3.3%. So this is obviously probably related to the buyback of the stocks, which has been an annual thing, which they may continue in the future, but they may also take it away on a long-term basis. APD looking quite fine here with 60%, which means they have room to grow their dividend yield if they wish to. And finally, a negative on 37% for DD. That is obviously related to when you have a loss in the end of the day and you're still paying dividends and or buybacks, the payout ratio will be negative, and that's obviously not sustainable in the long run. Again, keep in mind with DD that a big part of it was impairment charges. So again, nothing to be too worried about in our opinion still with the payout of the dividend and or buyback yield for their side. In the next section, we want to take a look at the earnings per share and growth, and here we are trying to understand whether the company is expected to grow their earnings and or revenue in the coming years. If we first take a look at the price to sales ratio, which is just an indicator of how cheap and expensive the stocks are compared to each other as of today, what we can see is that Linde appears cheaper than APD. It has $4.9, APD is 6.5 and 2.5 on DD, which is the lowest of the three of them. But however, keep in mind here that the revenues of DD has been shrinking over the last 5 years. If we take a look at the EPS growth year on year, what we can see is over the last 12 months, Linde has done considerably better than the others. They have grown with 12%, while as APD has only gone up with 0.1%, and DD has had a huge minus, of course, because they have turned negative due to the impairment charges. If we look a little bit further ahead, the estimate for the next 3 to 5 years, what we can see is APD is expected to do better than the two others on 16%. However, both Linde and DD are expected still to grow with around 11%, which is quite decent overall. If we take a look at the revenue growth for the last 12 months, as we talked about earlier, it's only APD who has had a small increase in 0.3%. If we take a look at the last 5 years, Linde has overall done considerably better than both APD and DD. They have grown with around 25% year on year, so that is a very good number. If we take a look at the estimation for the next year, both Linde and APD is expected to increase their revenues, while as there is an expectation of DD revenue to fall further with more than 25%. So a considerable drop is expected for them. And again, the numbers overall, besides the balance sheet and perhaps the shareholder yield, is just not looking that attractive compared to Linde and APD. We gotta say that. Finally, the net profit growth over the last 12 months, we can see again that Linde has done considerably better with plus 9% and only 0.3% for APD. Obviously a huge minus for DD. So for Linde and APD overall, quite good numbers, a bit more discomforting on DD. So again, if we take a look at the earnings per share growth forecast for the next 3 to 5 years, Air Products is expected to do better than Dupont and Linde. However, both of them are still expected to do fairly okay. The revenue growth for the next year, Air Products again is expecting to do the best from a percentage perspective, while as Linde is also going to do quite well. At least that's the expectation, while as Dupont again is seeing a significant decline in their revenue, which is obviously not a good thing. Finally, we have the net profit growth for the last 12 months, and here we can see Linde did the best by far compared to Air Products and Dupont. We finally want to understand whether these companies are currently under or overvalued, and we have different ways of doing that. One way is to look at the Peter Lynch fair value, and according to this, there's a downside significant in Linde on 84% and a downside on 56% for APD. So again, we probably need to take this with a little bit of a grain of salt, at least according to our opinion. We can also look at our own estimated intrinsic value, which is based on a lot of different numbers and assumptions. What we are seeing is that there's a fair value upside on Linde on 16%, a small upside on APD on 2%. However, keep in mind that we are being a bit cautious with our safety margins, so this could still be more, but we're a little bit more bullish on Linde than APD. And finally on DD, we are quite bearish on them, minus 36%. We really don't see a good case from the numbers that we have illustrated so far. We can also take a look at the beta ratio, which just shows the stock's volatility in relation to the overall market. If it's below 1, it basically means it's less volatile than the general market. And what we can see here is that both LIN and APD is less volatile, while as DD, which is again no surprise considering how the stock price has developed over the past few months, has been more volatile. But overall, as we said, this is quite defensive stocks, and they are supposed to do quite good in an environment where interest rates and or inflation goes up. So again, keep in mind, perhaps it's a good time to take out from some of the growth stocks and put them over into a bit more defensive place, just to diversify the portfolio a little bit. We can also look at some other value indicators. One way is to look at the book value per share, and from this angle, all of them are overvalued. We can also take a look at the relative strength index for the last 14 days. We want this to be below 30 because it means that it's oversold, and that is an indication that they will go in an uptrend, while as if it's above 70, it's in overbought territory. We don't want that because that could be an indication that it will do a pullback, basically decrease a bit in the share price. And what we can see is that all of them falls in the middle, so there is no clear conclusion from this angle of how the share price is going to move over the coming period. Finally, we can also take a look at the analyst recommendation, and as we always say, we want to take this as a grain of salt because they sometimes have their own agenda. But what we can see is that LIN and APD is both a buy. The analysts believe that there's a bigger upside on APD on 12% and only 2% on LIN, so we are quite in disagreement with them on this. However, nonetheless, we both of us agree that there is an upside on both these companies. On DD, they actually also believe that there's an upside on 4%, which we hugely disagree with. So again, just to illustrate that there is some differences, but there's also some kind of alignment with some of the companies. So finally, if we take a look at the overall value assessment of these companies, in our opinion, both Linde and Air Products are undervalued as of today. We see a larger upside on Linde than on Air Products. Nonetheless, Air Products has really strong, solid, good numbers. So we think both of them are pretty good picks, while as Dupont, in our opinion, is overvalued, and we will definitely stay away from that one. So again, as mentioned earlier in the video, just a small little commercial here for our new Patreon page that we have been developing on. We are going to upload the report that we have shown on Patreon, but we're going to add a lot of additional information. Some of this you can read here. You can get access to that through subscription. So obviously we hope that you will do that, both to get more valuable data on the companies that we are assessing, and also other reports that we are going to upload, which we are not going to show on YouTube, to put you in a better position to basically take better decisions on which stocks to buy. And at the same time, you're going to be able to help us, which obviously we would really appreciate. Again, this is just the beginning. We are still working on this, so there's definitely more to come. And if you have any suggestions or requests for things that you would like to see in a report, we will try and see if that is possible. Well, let's just continue now. This was just a quick introduction to it. We hope to see you there. So again, what's the verdict on these stocks? Well, overall, there's two very interesting stocks in our opinion. One of them is Linde, which in our opinion is a very undervalued stock with very strong fundamentals. There's expected growth in the future, both from an earnings perspective, but also revenue. And again, what is quite interesting is that Linde is quite active in the hydrogen sector, and they have some partnerships with some of the companies that we have evaluated previously on the channel. So again, it's not just a chemical company, they're also looking at other business angles, and one of them is hydrogen, where they're actually one of the bigger companies. So again, if you have an interest in hydrogen stocks, but you also perhaps want a bit more of a defensive play, Linde is probably a quite good opportunity for you. We also have Air Products, again undervalued stock with very strong fundamentals, and they are also having expected growth going forward. So a really strong, solid pick with good numbers overall. Finally, we have Dupont, again poor fundamentals. Obviously, the loss is due to the impairment charges, but despite that, the numbers are still not that good. They have a quite decent balance sheet, but from a revenue and earnings perspective, they're not performing as well as the two others. The revenue is expected to continue sliding, and because of that, we simply do not have an interest in this stock at all. This was all we had for today. Please keep in mind that we are not professional financial advisors and this is only done for entertainment purposes. Please give us a like, it really helps with the algorithm. Please give us a comment. It's also good to hear your opinion. Sometimes you have more knowledge about some of these stocks that is really valuable for us to get to know through the comments that you provide, so we always appreciate that. And please subscribe for future content. Besides that, there's not much more to say than stay safe, have a nice day. Hasta la vista, baby.